Well, it's time to turn our attention over to the markets. Earlier this week, Bryce Doeschot caught up with Central Valley Ag's Luke Beckman to see what's catching his attention in the markets as harvest kicks into full swing across the state. Here's their conversation from Wednesday afternoon.
Joining us now on Market Journal to discuss the latest happenings in the grain markets is Central Valley Ag's Luke Beckman. Luke, it's good to see you. Thanks for coming back to the program.
Bryce, great to be on. Thanks for having me.
Well, in general, corn and soybean prices seem to have bottomed out in the month of August and have gradually been going higher. How do you attribute the kind of our climb here as we roll through the month of September?
We really got into the September crop report, and we saw, larger yields on, the corn side, and we saw smaller yields on the bean side. And I think since that point in time, it's almost been a sell the rumor, buy the facts type trade in the corn market, despite record supplies forecasted on the balance sheets. And seasonally, we typically try to find some sort of pre-harvest low, on either side of Labor Day. So not uncommon to see, corn and soybean price strength as we get into harvest. I think as you look at seasonals, the month of October is not a terrible month to corn or soybeans in large carryout years, where we've seen some modest price strength during that month. So exciting to see managed money continue to cover some of those large short positions that they've held, particularly in soybeans here just in the last 3 to 4 weeks. They've been pretty aggressive in terms of doing that. So we've seen some nice price rallies. It's given producers a good opportunity to get some harvest time sales on and position themselves a little bit better as we get into the meat of harvest.
Let's dive a little bit deeper into some of the factors influencing the commodity trade on the corn front, Luke. We've got a report coming out on Monday. Tell me about that report from the U.S. Department of Agriculture, what traders are expecting, and how it could influence the markets.
Bryce, that's the September quarterly stocks report. That's always a pretty key set of data that we get from the National Ag Statistics Service. We get these 4 times a year, as the name implies, quarterly. The September one's pretty important. It's been impactful a lot of years. We get some surprises for a couple reasons. It's the final measure up that we get that the USDA will then basically make as their carryout numbers for the 23-24 crop year. We've seen large surprises in this report in the past. Corn, particularly the last several years, we've seen bullish surprises from this quarterly stocks report as we see a smaller carryout represented when we see the numbers. No guarantees that's what we see Monday. As a matter of fact, pre-report estimates are expecting that we do see larger supplies or a larger carryout, larger stocks number in the Monday data. Same for soybeans. So we'll see what it says. Essentially for the corn market, what it's doing, that final measure up helps us imply what the fourth quarter feed and residual number was. It also helps us finalize the crop size from last year, the 23 harvest, It'll do the same thing in beans. We'll get a final crop size and any adjustments that we need to see, most likely to the residual category on the soybean balance sheet. But it's a big step forward in terms of price discovery because it allows us to put the 23-24 marketing year to bed by finalizing the crop and also giving us a good look at what feed and residual demand was for the year.
And that information again coming out from USDA next week. Luke, let's talk about something else influencing the markets. That is the South America weather conditions. What's catching your attention on that front?
Well, Bryce, we had mentioned that managed money had been aggressively covering short positions, particularly in soybeans, since late August. And South American weather is certainly a key contributor to that. We look at central Brazil, one of the driest stretches they've had, their soil moisture profile really driest they've been in 30 years. And what that does is it delays the planting of their soybeans. Those producers want to see soil moisture before they plant soybeans so that they have, adequate germination for that crop. And so they're just sitting and waiting. Now, we're not late by any stretch of the imagination as far as soybean planting goes in Brazil. They've got a lot of time, a lot of latitude on getting that crop sown. But with the size of the short in the managed money position, in soybeans, I think it created maybe just enough concern that maybe we should cover some of these positions, put some profit in the bank rather than have all this risk exposure if, in fact, we do see a drought really intensify in Brazil. So it's something that we're watching. An implication for corn also is that if this soybean crop gets planted late, what it does is they harvest it later. And that can impact the second crop corn that gets planted in February. If things get too late, they will forego planting the second crop corn as drought late in the year, which would be like our springtime, May, June, would adversely impact the production potential of that safrinha corn. So bears watching. We're definitely early yet, but if we get into November and they're still having some issues, I think the market could get a little more excited.
All right, something to watch, as you mentioned, as we go into November. Let's talk about October and the month ahead. In general, what kind of seasonal trends do we see for corn and soybean prices?
Well, as mentioned earlier, we typically have seen in bigger carryout years like we have now, actually, and that may be counterintuitive, that we see some modest price strength, at least flat to modestly higher during the month of October. You're seeing that type of price action since we found some early, maybe pre-harvest lows right around Labor Day. So it's been great to see the price strength going into the early stages of harvest. So that could create some great opportunities for producers who are behind, on harvest time sales. And we've certainly seen that across the system. That's not unique to Nebraska. That's really been U.S. wide in terms of producers being undersold on this year's crop. So great opportunity, good timing of a rally as producers are harvesting and looking to make some catch-up sales. You're seeing a lot of $10 cash offers filling this week with the rally in soybeans. So producers are in a good position here, especially as they know what those yields are. They can complete the revenue calculation on their farm. Yield times price gives them that revenue idea. So we're really narrowing in on, are we profitable? Are we not? And that should give producers some confidence to make some selling decisions.